Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Last week, the Liberal Party of Canada and Prime Minister Justin Trudeau released their Home Buyers Bill of Rights, which offered 6 promises to help make home buying and home owning much more affordable for Canadians. Among the 6 promises listed in the Home Buyers Bill of Rights was a promise to ensure that the banks and lenders offer mortgage deferrals for up to 6 months in the event of a job loss or other major life event. Now, we're all aware of mortgage deferrals as they made major national headlines in March of 2020 as the major banks and most of the mortgage lenders all stepped up to offer mortgage deferrals in an attempt to make the lockdowns and the pandemic a little bit easier on Canadians who may have lost their jobs or lost their income due to the lockdowns. As the announcements came out for mortgage deferrals, there was over 200,000 applications that flooded into the banks to try to get the mortgage deferrals processed. Well, these deferrals definitely helped save the houses of a lot of people. Thousands of people were able to access these deferrals. They weren't meant to be permanent, and there are some real issues with making them permanent that I think the Liberal Party and the banks and Canadians as a whole are going to find, if this gets enacted, are going to cause major problems when it comes to qualifying for a mortgage. So what I want to do in this video is go over what happened when the banks and the mortgage lenders came out with the mortgage deferrals, the aftermath from a mortgage broker's point of view, and what I can see happening based off that experience in the future should mortgage deferrals become permanent. So when the mortgage deferrals came out, it was a lifesaver for a lot of people. Like I said, over 200,000 applications flooded into the banks, and I can even tell now that a lot of people took mortgage deferrals, as it does show up on their credit bureaus. The banks and the mortgage lenders, for their part, didn't ask many questions. A few of them did at the beginning, where you had to prove or at least state that you had lost your job. But then after a while, it just became carte blanche. Everybody got a deferral who asked for one. Very little was asked. The banks were just granting the mortgage deferral. It was a quick and easy process with quite a few of them. They had dedicated phone lines, etc., etc. So it wasn't a problem to get a mortgage deferral. The money would be tacked on to the end. So say if during that 6 months you would have paid $25,000, that $25,000 got tacked on to your principal. So if you only had, say, 20 years left on your mortgage when you got your deferral, well, then you would have 20 years and 6 months at the end of your mortgage. So they didn't cost you any money, but it didn't save you any money either. It just kicked the can down the road, so to speak, which was still a lifesaver at the time for many people. Now, let's be clear from the outset, the banks didn't do this out of the goodness of their heart. There's a few reasons why they did it. One, once a few banks did it, they all had to. Nobody wanted to make major national headlines that this bank isn't offering mortgage deferrals because people would have pulled their money, they wouldn't want to go with that bank again, etc., etc. So once a few did it, pretty much they all had to. Second, and here's the big kicker that no one really talks about, if thousands and thousands and thousands of people just all of a sudden stopped paying their mortgage, well, that would look horrible on the banks. So by offering deferrals, it allowed the banks to make their balance sheets still look profitable. They didn't have to book stop payments as losses, and everything just got kicked down the road until for like 6 months. So it didn't hurt the banks' balance sheets. The banks didn't lose a whole lot of money. In fact, it came out they made record profits later on. But it didn't hurt the balance sheets. People didn't pull their money from the banks. Investors didn't lose confidence, etc., etc., etc. So the banks, well, yes, it definitely helped. It wasn't, the banks didn't do it out of the goodness of their heart. Definitely, it was a business decision. But regardless, it helped everybody at the time. It helped homeowners and it helped the banks, and it did help us really get through the initial stages of the pandemic. Fast forward past the initial stages of the pandemic, past the first wave, second wave, past a lot of waves of the pandemic. Obviously, it's not over yet, and it's still going on. But once those initial shock stages, once we get past that and mortgage lending goes back to at least semi-normal, well, the banks and the mortgage lenders start to look and see who took deferrals and who didn't. Like I said, The banks didn't want to do it. They kind of had to do it to get those deferrals out there for their balance sheets and for public relations. But going forward, they were a little bit more attuned to who was going to be able to pay their mortgage in the event of a lockdown. So if you worked in the food industry, well, they were very, very cautious. If you worked in other industries that were locked down, that were subject to major losses of income during the pandemic, you too were subject to a little bit more scrutiny. They looked at you a little bit closer. So when I see Prime Minister Trudeau and the Liberal Party saying that they're going to help out homeowners by guaranteeing these 6-month deferrals, the first thing I think is, yeah, the banks will do it if told. They won't like the government overreach. They will offer those 6-month deferrals, but they're going to do a few things as well. They're going to price that into their interest rates. The banks aren't going to lose money. We all know that. So that the money, the cost of deferring for 6 months is going to be priced into the interest rate. Second, they're going to be much, much more careful as to whom they loan money to. They're going to look at certain industries much more closer. They're going to want to see more savings, not just the savings for the down payment, but they're going to want to see, do you have a backup fund? This is in Canada, in capitalist countries as a whole, borrowing money is not a government right. The banks can choose to lend to whom they want. So if they're going to be told by the government that you have to make sure that you have to provide 6 months of mortgage deferrals to people who lose their job or have other major life events, if they're going to be forced to offer that service, then they're going to be very choosy as to who they lend to. Finally, the document, the Home Buyers Bill of Rights, doesn't list out what counts as a major life event. So we know what job loss is, but will a 3-week job loss be enough to get you a 6-month deferral, or does that 6 months get lowered back down to the extent to which your job is gone? How major of a life event will it have to be to get that 6 months deferrals? This isn't specified yet. If it does get specified, I will have a video. Click subscribe to get that update. But as of right now, we don't have those details. But if the mortgage deferrals are going to go forward, we'll certainly need to have more information as to what constitutes a life event and how long the job loss needs to last for. We can certainly count on those 6-month deferrals being priced into your interest rate. And I would bet that it's going to be much more difficult to qualify for a mortgage going forward if the banks know that they're going to have to possibly be forced to offer 6 months mortgage deferrals. Now, all this isn't to say that mortgage deferrals are a bad thing. I mean, people do lose their jobs. There are major life events, and it can genuinely be through no fault of your own. 100%. What I just really mean to say is that nothing is free. And when the Liberal Party says that they're going to give you these 6-month mortgage deferrals, well, the banks aren't just going to take that lying down. It's just to help you consider what these policies will actually look like once they're implemented. And we kind of have an idea what they're going to look like because we've already had mortgage deferrals that were voluntarily taken, although they had to. The banks still voluntarily undertook these mortgage deferral process. And although they didn't lose money, they didn't make any money off it either. When the banks are forced to do this by the government, I would assume they're going to, 1, make sure they don't lose any money, but 2, they're going to make a little bit more money for the risk premium being undertaken by these banks. So I would definitely look out for a little bit higher interest rates going forward and a little tougher qualifying standards. With that said, we'll have more information on these mortgage deferrals as they come out. Right now, the press and the parties seem to be focusing on this ban on blind bidding, which is the reaction hasn't been great by the real estate boards and by a lot of real estate agents, but the voters do seem to love it. That's besides the point. If more information comes out on these mortgage deferrals, we'll have them out. Please click like and subscribe to receive those updates, and thanks for watching.